Ethical Perspectives on the News is produced by the Interreligious Council of Linn County, which is solely responsible for its content. The views and opinions expressed on this program do not necessarily reflect those of the staff and management of KCRG TV9.
Welcome to Ethical Perspectives on the News. I am your host, Karl Cassell, and today we are going to talk about an exciting topic, hopefully one that over the last few years you've heard about, but more importantly, one that you will continually hear about. So for anyone who watched this year's Super Bowl, not just here in America, but all over the world, they were able to witness maybe the dawn of the general public hearing and knowing about these things called cryptocurrencies or Bitcoin. And so today we have a special guest, Jeff Phillips, who is the president of Barnstone Strategies. And he's going to talk a little bit about Bitcoin, how he got involved, and then all things Bitcoin. So with that, welcome, Jeff. I think you're on mute.
Okay, looks like I'm good to go now. Thank you, Karl. It's nice to be here. Thank you for that.
You're welcome. And so first, just talk a little bit about your background, what got you into Bitcoin, and talk a little bit about that.
Yeah, thank you. Thank you. Well, my background, I spent most of my career operating companies in the software space. And about 2018, a friend of mine suggested that I start buying some Bitcoin and making some investments. And to be candid, I didn't know why or whatever, but I trust him. So I started buying some Bitcoin, sort of dollar cost averaging on a monthly basis. And I didn't really pay any attention to it. I spent zero time learning about it. And then March of 2020 happened when COVID hit and the lockdowns all started, and we proceeded as a country and frankly as a world to, create trillions of dollars worth of new currency in the money supply. Other countries were creating their own currency in their money supply. And I realized that was unlikely to be sustainable. And you put all those things together, it worried the heck out of me. And so I started really studying Bitcoin more deeply. And as we say, I went down the rabbit hole, and I spent several months really deeply understanding how it works and why it's important and what I think it can do for the world. And I became more and more convinced that it was the best asset in which to invest, and also the best option we have for hard, sound money as a society. And so I started making some investments. I took some portion of my investable assets that I had and got out of the stock market and out of other things and started accumulating Bitcoin. And to be candid, Karl, I've been accumulating ever since. I'm what we call in the Bitcoin world a hodler, which means I buy, but I never sell. And that's my intention. I don't ever want to sell my Bitcoin if I can help it, because I really believe that it's the foundation for individual wealth and individual sovereignty. And it's going to make the difference for a lot of people, probably the whole world someday, as it grows and adoption continues.
Oh, that's wonderful. And I have about 10 questions just out of that I want to ask, but I want to start with, you are an investor, not necessarily a trader, because I think people need to understand the difference when you look at something like Bitcoin. People are looking to get rich in 4 days, 4 months. It's probably not realistic, but you are investing in Bitcoin, correct?
Yeah, that's a great distinction, Karl. Essentially, there are two kinds of people in the world of equities and commodities and cryptos and things like that. You've got traders and you've got investors. And I think trading is fine. I think that it's a great way to make money if you're good at it, but one of the things I've read is that literally about 5% of all traders are actually good at their job. And if you're not sure, then you're definitely not one of the 5%. And so I was certain that I would not have the bandwidth or the probably the talent to be a good trader. And really, my objective with investing in Bitcoin is a long-term objective. And so, I think that traders enjoy Bitcoin and other cryptos because there's a lot of volatility. And so whenever there's volatility, there's opportunities to be had with making money on the upside or downside. But if your time horizon is longer and your time preference is lower, then I think you have a much better chance at success if you just buy and hold. And for example, one of the things that is interesting about Bitcoin, so Bitcoin's been alive for about 13 years now. And over the last 10 or 12 years, since it sort of gained some monetary capability, you can take any 4-year period in that 13 years, pick any day to start a 4-year period, and the asset has gained in value over those 4 years. And in fact, it's performed better than any other asset available to us in those same 10 or 12 years. So my view is hold it for as long as possible, forever potentially, because it's the kind of asset that can have generational value for people to hand down to their heirs and really make a difference in their lives and their families' lives.
So let's talk about the value and is Bitcoin a store of value? Some would like to argue that it's not worth anything. Would you beg to differ?
Yeah, I would. The value of, so first of all, the value of anything is in the eye of the beholder. And but with an asset like Bitcoin, the value is founded, or the foundational value, I should say, is really in its scarcity. So a big part of the value proposition of Bitcoin is that there will only ever be 21 million Bitcoin. It's programmatically locked in that there cannot be more. So think about currencies, for example. So the US dollar. That is sort of the opposite of scarce, right? In March of 2020, I believe we created about $1 trillion worth of stimulus money. Later in the year, there was another $1 trillion. And I believe in the last 24 months, we've created $8 trillion of new debt and monetary stimulus. That's just the US dollar. It doesn't include the euro or any other currencies around the world. And so that's the opposite of scarce. So when you think about Bitcoin in terms of value, the first thing to think about is its scarcity. So there's 21 million only ever going to be created. Each are highly divisible in 1/100 millionths of 1/100 million pieces. And that means there's an endless supply of bits, but it's definitely capped at 21 million. So the idea would be is that, as the opposite of inflation, it's effectively deflationary. So as more and more things become priced in Bitcoin, the value of them go up and your purchasing power goes up because there's no inflation happening with that particular currency or asset, depending on how you look at it. One of the other things, Karl, that's interesting about Bitcoin is that scarcity gets increased, if that's the right way to think about scarcity. So it becomes more scarce as time goes by. Right. So every 4 years, programmatically in the Bitcoin protocol, there's what's called a halving event. And so there's a Bitcoin reward that gets paid to the people and the machines that validate transactions and lock them into the database. And that reward gets cut in half every 4 years. So that means the new supply of Bitcoin, as it approaches 21 million, is diminishing as time goes by. And so it's a parabolic curve that as it approaches 21 million, it gets harder and harder to unlock new Bitcoin. And therefore the new supply is significantly less as time goes by compared to the total available Bitcoin that might be in circulation now. One of the things that is helpful to people, I think, is when I compare the supply of Bitcoin to other things. So for example, right now in this 4-year period that we're in today, every day about 900 new Bitcoin is unlocked and released into the network and used to pay Bitcoin miners for the work that they do. That ratio of 900 a day versus over the course of a year versus the total supply of Bitcoin is roughly equivalent to the new supply of gold that's mined and refined every year. It's about 1.5 to 2% increase per year. That means it takes about 60 years. It would take about 60 years to completely double the supply of gold in available above ground. And Bitcoin is equally scarce today. However, 2 years from now, there's going to be another halving event, and then the new supply of Bitcoin is going to drop significantly, and that's going to make Bitcoin's scarcity roughly equivalent to residential real estate, worldwide residential real estate. So think about how fast the residential real estate market grows. We build new houses, but it's way less than 2% new houses a year. And then 4 years after 2024, when the next halving event occurs, Bitcoin is going to officially become the most scarce asset available or ever known, frankly. It'll be more scarce than real estate and any other asset that you can imagine.
That's fascinating, because when you look at, if we're looking at Bitcoin's value today at about 44,000, and you talk about the next 4 years, 6 years, 8, 10
Right.
years, what does that value in real fiat dollars per se? What does that look like, or potentially what could it be?
Well, I don't know. And I can tell you what it's been, and that might give people a clue as to what might happen in the future. So I happened to look up today that there's a website that I use to look at these kinds of things, and it's tracked Bitcoin for the last 8 years.
Yep.
So 8 years ago today, the price of Bitcoin was approximately $68. So it's gone up almost 65,000% in the last 8 years. Now, I certainly doubt that it's going to appreciate that fast in the next 8 years, but as long as people value scarcity, and we do as a society, think of the things that we buy or want to buy that are scarce. Particular real estate assets that might be, a downtown property or waterfront property. Think about collectibles, for example, whether it be baseball cards or a collectible car or a fine watch or almost anything else. The more scarce it is, the more value it has. And that value tends to stick with that asset, but it also tends to appreciate. And part of the appreciation happens because of currency debasement. So one of the things to think about is, as long as the dollar has no bottom, Bitcoin has no top.
Right. Now that's a great way to describe it. You talked about the network. It comes on the network. So explain to people, maybe give background on what the network is and what mining is.
Okay. Yeah, that's a great question. So Bitcoin is effectively, when people talk about Bitcoin, they're either talking about the Bitcoin network, the monetary network that it is, or they're talking about the token, the asset that is derived and lives on the monetary network. Unfortunately, they use the same name for both things, but they're actually quite different and completely interlaced. So the network effectively is a decentralized set of computers owned by all kinds of different people and companies and entities around the world. And the Bitcoin network consists of today approximately 2 million independently operated computers that each have an exact copy of the entire Bitcoin database living on it and running the protocol. And it's important to note that there is no central authority with Bitcoin. So there's no server sitting in Redmond, Washington, running the Bitcoin database by itself. Right. There's no Bitcoin corporate office. There's no Bitcoin CEO. There's no marketing department for Bitcoin. It's completely decentralized and started as a grassroots effort. And so these 2 million machines around the world that are running the Bitcoin protocol, what they're doing is they're processing transactions. So roughly every 10 minutes, this computer system gathers up all the transactions on the Bitcoin network into a group, and it's called a block. And this block then gets processed by all these computers applying a hash algorithm that essentially creates a unique result based on the inputs of the transactions. And as they do this work, they're actually competing with each other. So these $2 million, that could be answering the previous question you asked. Right. These 2 million computers are all competing to be the first to solve the algorithm that will be a result of this particular set of transactions in this 10-minute block. And so the winning computer actually wins the block reward that I was mentioning earlier. Today it's 6.25 Bitcoin today, and that's worth at $44,000 about $300,000. So as you can imagine, a lot of people have invested a lot of money into these computers and pay for a lot of electricity to run them in hopes that they will be part of a group or an individual that happens to win that block reward in some 10-minute time block.
Certainly.
And so the Bitcoin network as a result is highly, highly secure, because the reason these blocks are important is, this is one of the, I think the title of your show today, Karl, is about blockchain. Well, what is a blockchain? So a blockchain is essentially a software database that was first conceived of and put to work with Bitcoin. And it's a unique database in that all the current transactions contain a reference and a representation of all the prior transactions. So when one of these new blocks is mined in this 10-minute period, part of the data that goes into that block is a representation of all the prior transactions that have been mined over the course of the last 13 years. That means that once it's locked in and this new block has been completed and verified, that you can't go back and change any of the prior transactions in prior blocks, because if you do, it'll disrupt the blockchain and essentially corrupt all the future blocks going forward, and they'll be different. And then these 2 million computers will look at that resulting set of blocks and they'll reject it. They'll say, this is not valid because it doesn't match the copy I have. And so for these reasons, Bitcoin is very, very secure, because in order for any changes to be made, you have to get the network to agree with them. And of course, the network's not going to agree with any changes that are not correct.
Certainly. So let's talk about that a little more, and the centralization versus decentralization. So you talked about it not being owned by any one corp.
Right.
So as we look at our current dollar supply, money doled out by central banks, what's the difference between centralization and decentralization? And why is decentralization more advantageous for the average American citizen?
Yeah, that's great, Karl. Decentralization is a key element to Bitcoin or any new model that we might want to put forward to solve problems that we face today. So central banks control their currency, their country's currency. And we see what happens. So you've got the Fed here in the United States that's deciding when to increase the money supply, decrease the money supply, buy assets off the market to create more velocity, things like that happen. But these are literally a group of 12 people or so sitting in a room once a quarter making decisions about what they should do as policy, versus the idea that's very, very centralized, versus the idea that if there was a community, the sort of the wisdom of crowds, so to speak. So the idea would be that with centralization, you get control, you get authority, and you then get the ability to do things that we citizens don't usually like censorship, confiscation. Central authorities can do a lot of things that typically go against the fundamental beliefs that a lot of citizens have. They may not, but they can. Here's a great example, Karl. So we are all probably pretty familiar with the Canadian trucker situation going on these past few weeks.
Yep.
So in Ottawa right now, there's, whatever, thousands of trucks and people sort of blocking things, trying to get their voices heard. Well, when that first started, a lot of people from around the world, especially here in North America, were contributing to GoFundMe. So there was a GoFundMe campaign put together, and it was run by GoFundMe, which is a centralized software company that provides such services.
Yep.
And then it didn't take long for some government authorities out of Canada to threaten GoFundMe.
Right.
And GoFundMe changed their mind. They said, we're not going to fund this donation effort anymore. They canceled it. The truckers did not get any of that money. Luckily, GoFundMe actually gave money back to the donors, or I believe that's happening.
Yeah.
And then guess what? Another crowdsourcing company popped up called Give, Send, Go. So Give, Send, Go started saying, hey, we're different than GoFundMe. We're not going to let the government influence us. We'll live up to your standards, and you can donate through us, and we'll make sure the truckers get it. Well, a few days ago, the federal government of Canada put some extreme measures in place, and they've now threatened Give, Send, Go and any bank that works with Give, Send, Go, and essentially has cut off the supply of the donations to get to the truckers through the current traditional financial channels. So there's examples of two centralized systems, which I don't have a beef with either one of them necessarily, but they're centralized, and therefore they can be influenced, they can be censored, and they can be shut down.
Certainly.
Well, guess what's happening in parallel? Bitcoiners from around the world are also contributing Bitcoin to a fund that was set up by some Canadian Bitcoiners, and they're today, as of this afternoon, yesterday afternoon, I believe it was up to around 22 Bitcoin, which is pushing $1 million worth of Bitcoin value. And they're working through the process right now of getting that Bitcoin value to the truckers in a way that can't be stopped, because if the truckers have a Bitcoin wallet, there's no intermediary. There's no central authority standing between the donor and the trucker, and the Bitcoin can flow directly to the recipient with this. No central authority can stop it because Bitcoin runs on a decentralized network with no CEO and no home office. And as a result, I think what we're going to see is the truckers are going to end up getting some financial relief, but it'll be in the form of Bitcoin over the coming days and weeks.
Certainly. So that leads me to the new mayor of New York. Some pro athletes are now starting to accept salaries in Bitcoin. You have China, Japan, Australia, Germany, Canada, as you mentioned, Mexico, United Kingdom, El Salvador, Brazil, France, Denmark, Iceland, and Spain, all accepting Bitcoin. I mean, that's a lot.
That's a long list.
Yeah, that's a long list of countries. Some of our our largest city in the world, the mayor accepting it. Do we see this trend continuing? And if so, what does that mean for the rise of not just Bitcoin, but cryptocurrencies and the exchange of currency between individuals going forward?
I don't see anything stopping it. You mentioned in your opening comments that the Super Bowl last weekend was very similar to the Super Bowl in the year 1999 or 2000, when the internet became the thing. Well, it's uncanny actually how closely tied the adoption rate is of Bitcoin and cryptos to the adoption rate of the internet back in the 90s and the early part of this century. Yeah. It's following a very similar trajectory. However, the Bitcoin adoption is actually going faster than the internet adoption happened. Yes. So I think what we're going to see is that we're going to go from, I think today, something like 200 million people hold Bitcoin worldwide. Yep. I think that'll be 1 billion people within a few years, and it'll be half the world's population a few years later. It's going to go, when it starts to accelerate, it's going to accelerate really, really fast. And I think countries, like you've mentioned, adopting it at any level is helpful for sure. one of the best stories is El Salvador, where they were the first country to adopt Bitcoin as legal tender and made the dollar, they're on the dollar standard today, and now they're on the Bitcoin standard as well. So they're operating basically two currencies in parallel, and it's making a huge difference in their country. The population is safer because when they go to get their remittance from what's the name of the wire company that you can send stuff around the world, Carl?
MoneyGram, or
one of those. Guess what? The thugs are always outside that door waiting for you to come out with your $150 in your pocket, and they're saving on remittance fees, and it's pretty impressive. So I think this is going to continue, and it's going to get greater. With this many people believing in it and really believing in the idea of sovereignty as individuals and the ability to exchange value with one another without an intermediary, I think it's a trend that's going to be pretty unstoppable.
Certainly. And so one last question for all of those who are saying this is ridiculous, it'll never happen. The U.S. will never fully adapt digital currencies. Well, the U.S. right now just did a test run on their potential central bank digital currency. 137 million transactions per second. Do we see, for those who don't believe it's happening, if your government is looking at it, should we trust that eventually this will be mainstream? And you kind of answered it in the last question. But I want people to hear that your government is now looking at this. Other governments in the world are looking at it.
Yeah, they sure are. Although I'll say I like to think that they're looking at it because we plebeians are already on board, and they know that if they don't do something, they're going to get left behind.
Yes, true.
So I fully believe that. I think that the idea of a monetary network that is separate from the state is critical to the direction that our society and our race, goes forward with. I think that the governments are going to try to play catch up. I think it'll be years before the United States actually has a CBDC. But yeah, all countries are going to roll out a CBDC. But the problem is, it's merely a new version of the fiat currency they already have.
Yep.
So I don't necessarily think it's going to be a better world with their digital version of their currency. But hopefully it's better in some ways. But my fear is that it could be worse.
Certainly. Wow. I wish we had at least another hour.
There's a lot to unpack. Always.
We barely scratched the surface. But I want to thank you again, Jeff Philipp, president of Barnstone, a strategy, for joining us today on Ethical Perspectives, really kind of giving as best you could in a very short period of time people a glimpse of what is literally the ground changing beneath your feet. And so we thank you, the viewer, for watching. Please do your research. We're not advisors. We're not telling you to invest.
Right.
All we're telling you is to understand that there is something happening and it's here to stay. And with that, thank you very much. And for you, the viewer, enjoy the rest of your day.
Thank you, Carl.
You're welcome.